Good morning, everyone. How are we today? My name is Simon Taylor. I'm the chair of today's Track 1, all about blockchain and distributed ledger. You can find more about myself and what we do at 11FS at 11fs.com. But it's not about me, it's about a wonderful panel today. And the panel are talking about, to my mind, the most important thing when talking about blockchain and DLT. It is, when does this stuff get out of the labs and when does it become real? I'm sure that's a topic on the top of all of your minds. So without further ado, Ruth, would you welcome our panel? Thank you very much.
Simon. Okay, good morning, everyone. So I've got a great panel today. Briefly introduce myself, and then we go around the group. So I'm Ruth Wantefer. I work for Citi, and I've been involved with innovation and regulation for many years, regulation probably too many years. And it's really quite clear that regulators are all asking, what should we regulate? And the industry is wondering whether they can actually move some of their test lab activity into the real life application. So that's why we want to discuss at this panel what's actually happening for real and when this will all take off. So I've got next to me, first of all, Eric from Chain. He's running Europe. Eric, a little bit about yourself and Chain.
Sure. Chain is a blockchain technology company based in San Francisco. We work with companies such as Visa, NASDAQ, Citibank, and a range of others. I have been out in San Francisco for the last 2 years, moved to Europe, relocated here about 3 days ago, so very fresh and new in my role, and we'll be focusing on serving our clients here in Europe now.
Hannah, CEO of Intellect EU.
Hannah Zupko. So Intellect EU is an integration and development company focused on integrating blockchain technology. Prior to that, we had 10 years of experience with integrating various back office systems with primarily financial networks. So have done over 200 banking and MI projects in 26 countries. So worked pretty much in all different corners of the world. Also, the purpose of us to exist is to bring interoperability to systems and networks. So we do look for the world to become interoperable and enable transactions go much smoother and much faster than today.
Great. Maya Zehavi, product at Qued IT.
Yes, hi. I've been in the blockchain space for about 4 years, and KEDIT is a group of Israeli blockchain veterans and cryptographers that came together to create an audit platform using zero-knowledge proofs and multi-party computations so that third parties can set rules on private data and use the blockchain in order to verify and receive answers to different audit questions, such as compliance, valuations, risk assessments, and so forth.
And Richard Brown, who's running the lab at RBS.
So Richard Crook, head Emerging Technologies Lab at World Bank of Scotland. I run a small team taking the shrink wrap of emerging technologies. For my sins, I helped UBS build their general ledger when it wasn't fashionable to be in ledgers. Now that distributed ledgers are a fashion, I have been dragged out to look at distributed ledgers and how we can apply that technology to improve customer experience, reduce the costs, and increase the revenue.
Great. So to start off, we have 2 Slido questions to really think about what the audience sees in terms of the long and short-term implications of blockchain in different areas. So the first one is, what is in the long term the biggest opportunity for distributed ledger, blockchain 5 to 10 years, KYC identity, post-trade finance, regulatory compliance, or saving the whales, or saving nature, or saving humanity from robots? So let's have a look. Cross-border payments, identity, okay. Do we ever do a cut at some point? Okay. So there's a lot of excitement about cross-border payments as well as identity. Trade finance, I guess people realize that it's a bit more complicated. Okay. So regulatory compliance, like no one cares about that. That's really bad. Okay, so I guess we stop this moving, and then we move to the second Slido question, which is, what in the short term is the biggest opportunity across these variables? KYC identity, securities post-trade, payments, compliance, and saving life. Okay, payments. It's maybe because I invited all my payments friends to come. There must be some correlation here. Okay, why don't we just moving from these sort of high-level results straight away into what the panel thinks. So maybe ladies first. Maya, what's your perspective on this?
I find it very fascinating that payments won the day. I think, to be honest, I think in terms of 1 to 3 years, the use case is probably not going to be payments because of all the regulatory demands when you're looking at cross-border payments. The different jurisdictions, the different adherence, different rules. I know some very smart people in blockchain would disagree with me. For that kind of use case, such as cross-border, for example, at Kedit, we've been looking at having real-time compliance in these kind of transactions. But I think a lot of the use cases that we're really seeing are very sliced and diced and narrow, other than the big title that says payments or KYC or identity. It's not something as practical as you initially think, because after you have that nice little lab design POC, it's never going to go anywhere other than prove that maybe you can do it. That's because of regulatory demands. That's because at some point, all the parties to that blockchain, and it is a collaborative effort, are going to realize that everything is transparent. And do you really want your competitor to know exactly what's coming into your, from overseas into your ledger? Do you really want to share with others exactly what's going on? Or do you just want to be able to immutably recognize that these were the transactions? And that's why I'm much more in doubt of that. I actually think trade finance is, in terms of banking, is one of the more advanced because there is such a growing need. But to be honest, I think it's going to come from the enterprise system where a bank is just a node. That's going to be the real compelling blockchain case that we're going to see first.
So maybe Eric, I mean, enterprise is kind of the key word. Clearly, we have seen things happening at enterprise level.
Yeah.
Share a few words on that.
Sure. I mean, on cross-border payments, we will see something with Visa. So Visa has launched a product called Visa B2B Connect, built on chain software. It's a cross-border payment platform, and you can go up and sign up now to be one of the banks participating in the pilot. So that's probably going live this year, or it is going live this year. On a strict technical basis, it is live right now, but they're signing up now for the commercial launch. So I'd say cross-border payments is one that's coming soon. The other one is post-trade settlement for securities. So working with NASDAQ, and they actually launched NASDAQ Link 2 years ago. So a marketplace or a platform to trade private securities, just integrated with Citibank, so you now have dollars and securities on this blockchain network. So those are two examples of things that are live right now. Yeah, I'll save some of the other kind of use cases. I'm not as bullish on some of them, but I'll let the other panelists cover those.
Hannah, yes.
All right, so I'm very passionate about identity and KYC use case. And the reason for that is that it's very meaningful both short-term and long-term. So very short-term, we see the interest from primarily financial institutions, but way beyond, to create that very basic infrastructure of identity and KYC, either within their organizations, across different multiple branches and entities, or as a consortium effort. Also, we're a proud member of and founding member of Hyperledger, Linux Foundation's project, and Linux Foundation within Hyperledger has identity working group. It's BNP Paribas Vipin Paratan who leads that effort, and it brings together a number of players, right, out of over 140 members of Hyperledger who are contributing on solving that identity issue.
Can I just tease you for a second?
Can I just finish the thought also on the longer vision, and then I will for sure be happy to address your question. So on the longer term, there's also a bigger social impact and potential impact around identity. So last week there was UN hosted ID 2020 forum, and the issues that we are addressing there is helping and bringing to the global economy, 1.5 billion individuals who are not banked or have no formal identity, and as a result have no access to government services, healthcare, banking services. So there is an opportunity, and that's a longer-term vision. By 2030, UN and there is ID 2020 Alliance and corporate players such as Accenture and Microsoft and a number of others joining efforts on solving and by 2030 giving identity to every individual on Earth that is portable, and as a result would solve not only the economic participation of that population, but also solve issues like human trafficking, of going to another country and not having ability to prove who you are, or like refugees crisis, where you actually, kids in the refugee camp cannot really get, could get shots and vaccination twice. So that's like a broader case, like probably outside of Money 2020, but it really can impact us on many different levels, like from just financial inclusion, from identifying customers through KYC, to like solving bigger issues.
Maya.
I just want to say that identity is everything, and everyone from Richard and his projects to Chain, and probably you, the minute you start designing a blockchain thing, you have to think about identity of the process, of the security, of the person, of the organization, of the node. So identity is built into every single blockchain project that you hear. It's not only the identity of people, and we have to keep that in mind when we think about it. Sorry.
Now, Richard, from a bank's perspective.
So if you look at let's just break into the two questions you asked. One was long-term, one was short-term. In the long term, the large wholesale banks, Royal Bank of Scotland being one of them, the reason the opportunity is there, or the size of the prize, is the interbank reconciliation. So the last 25 years, the majority of the big wholesale banks have been running large projects to get to single sources of truth, single sources of calculation inside their houses. Those projects are pretty much complete. Most of the large wholesale banks are in that situation where they have a single source of truth or single source of reconciliation and calculation inside their house, but they still have thousands of man-years of effort at the back of the bank trying to reconcile interbank. And when they realize that it's just across the street, the same thing is going on the other side, Barclays, Royal Bank of Scotland, HSBC, Deutsche, actually, the promise of distributed ledgers or blockchain is that interbank reconciliation and the reduction of the next 25 years worth of costs out of the back of the bank. That's the long-term play. The short term, you've seen us break cover with a clearing settlement mechanism, Emerald. You see us deploy that out in the Republic of Ireland with the 5 banks out there. Cross-border payments, I'd agree with the audience, is the most obvious one of reapplying the technology, which is in its infancy. It is an immature technology. It's got a store of value. It's been proven to do that in the Bitcoin experiment. And it is also proven that it can do transfer of value in the Bitcoin experiment. We're reapplying that to cross-border payments, and that's the most obvious one. If you look, though, in the short term of what we're going to likely see of the next year is the regulators starting to wake up and realize they have a new technology to regulate us with. Currently, they can only do 2 things: ask for more data and ask for the data in a different way. And they do that with protocol and transport, to use the technical terms. And now they have state, which they've never had before. And the ability of a distributed ledger to allow them to make 2 regulated entities come to consensus before the data comes to the regulator means that they can outsource, push back upstream one of the greatest challenges they have, which they stand like a man with 2 clocks. They don't know the time. They stand inside their regulated institutions, or their regulator stands with their data from both sides, trade reporting being the best example. I do a trade with Barclays. Barclays does a trade with me. When the regulated trade reporting comes back at the end of the day, it should add up. It doesn't, for many reasons, but it doesn't. And for the regulator, that is the biggest problem, especially if you are a central bank who's trying to get a macro picture of things like liquidity, inflows and outflows, overnight funding of whichever currency you're issuing. Those are problems which the regulator can now solve because they've now got a third weapon, state.
So maybe just to add some parts from my side, I mean, the big question as to what is actually live, many things are not so visible, but things are live also in the ancillary world. So the whole Bitcoin digital ecosystem is something that is clearly connecting to banks. And today, banks are often not prepared to process transactions coming from exchanges. They have no history on AML and risk. They don't know what really happened in the Bitcoin ecosystem. And there are companies out there that started to provide the analytics, blockchain agnostic across AML, risk, and even different regulatory compliance. And I think back to your point, in the future, this will be solutions for regulators to deploy, to constantly see whether the rules are being followed, and to even instill changes of rules from their side. And I think that's the interesting part, that we're seeing the bridging of this sort of old fiat banking system with the new system through technology, which is ancillary to the actual core of the distributed ledger. But I agree with you, having a ledger, creating so much more data, if you're really ready to put the data on, that then you can use in different ways and check things directly and still have the data protection piece. I think that's the future. And clearly people are also making money in completely different areas with loyalty or government-led projects that are suddenly showing you can reduce fraud on trade invoice. So there are things that are happening that are actually in the live stage, but it's true at a large infrastructure scale, we haven't seen central banks, regulators, and banks coming together to deploy it. So we're seeing a lot of government initiatives working with multiple banks and bridging with regulators on fintech bridges to test things, but we are in that POC phase. And I think it's probably more 5 to 10 years to have full deployment rather than 1 to 3 to 4 years. But I think that's the exciting piece. So, okay, maybe continuing, Hannah, in terms of the experience from your clients, I mean, what was the driver, and is this in production, is this live, or are people still testing, and when is the time frame to set things live, and are they really on the blockchain, or are they using more ancillary elements?
So from our experience, of course, as an integration company, typically we work with customers who are already further in their evaluation of the technology. And to be realistic, so it still will take time for technology to really become fully scalable to the needs of financial industry. So particularly, like even this week at the booth, we saw prospects asking, like, okay, can this do 50,000 transactions per second? You know, and that's why, for example, in Hyperledger context, there is a working group on scalability and performance. And this is work in progress where, of course, like with Bitcoin, if it would take 10 minutes to process transactions, it would not be suitable for any transaction banking or payments use case whatsoever. So from our experience, we are working with POCs and pilots in numerous specific implementations. So it's from central bank use case, from KYC use case, from trade finance and provenance use case, data tracking and management. So there's really a variety of cases where we already now evaluate what could, like how we could put that into existing infrastructure, because it would be naive to imagine that blockchain implementation, DLT implementation would be totally on its own in the zoo, as we like to call it, of back office systems, where very often there is like, you need to connect to ERP, you need to connect to various data sources that would trigger smart contract. So that's the roles that we play. So really, just to be more specific, like our estimations that within the next 12 months, we'll see more and more cases of shadowing existing processes or inventing new processes within financial institutions, but it will be like further along the road to really adopt it at the massive scale.
So I've got a question from the audience, and I think I'll start with Eric on that one. So the classical, is there any use case for blockchain out of banking, administration, entities, and governments or regulators? And what can blockchain do that other things can't? Is it just not a better database? So, and I think that's where maybe the strategic perspective comes in.
So the way we think about it at Chain is, blockchain enables a new medium for assets, financial assets specifically. And what does that mean? So starting with an example, central bank today gives out money in different ways, bills, but also through the commercial banking system, through ledgers. So if you're a bank, you can actually tell the central bank, hey, can you ship me $1 million in an armored vehicle, and they deduct it from your balance sheet, your position at the balance sheet, and you get the same amount of dollars, but you get them in a new medium, right? So blockchain enables a new, third medium in that example. So you can actually ask the central bank now, hey, can you issue currency, these dollars, into this blockchain, this new cryptographic medium? So once you have this in this new medium, you can actually do things with it that you couldn't do before. One of them is exchanging it for a security that also has been issued into this medium without using an intermediary. So basically enter a swap contract, you both sign it, and for the first time, you actually swap this Apple share for money without using a clearinghouse. And the reason you can do this is because everyone's interacting with the same ledger, but you only have kind of write access to your own assets on this ledger. So instead of having your own standalone ledgers, and at the end of the day, you need to make sure that my ledger syncs up with your ledger, and there's reconciliation, there's errors, where everyone's looking at the same ledger. So, taking a step back, we think blockchain is for assets, financial assets, and it uniquely enables some of these things that I just went through.
Okay. Maya.
Yeah, I'd like to pick up on that. That was the promise, right? That was what I think about 3 years ago when everyone here came and first learned what blockchain really is. It was that dream that two parties, two banks, Deutsche and Barclays, are looking at that one ledger and they all agree as to the state of the world. The problem is when we started designing and doing our little experimentations in labs, they don't actually agree because there's no actual data on the blockchain. There are hash, there's commits, there's different trust circles, but you don't have that global consensus that we all wanted. And that's really the answer to the question, I think, about what blockchain was supposed, what does DLT bring? That was the promise, that we have both consensus as to when a transaction happened, and also as to what is the content of that transaction, whether it's a singular transaction or an aggregate transactional log of data. Now, if we are able to achieve that, and I think we're still in the early days because it's nascent, just like Richard said, and we're still experimenting if it's about scalability or number of transactions, but the actual leveraging of this technology can go from governments and regulators using it as a tool, actively participating in writing the rules of consensus into a ledger, be it for securities or equities or central bank money. But it also has a much wider range of thinking. It's about an identity. It's about me, right? Me as an identity, my house, where is it registered? What are the things in my house? My laundry machine, my dryer, my fridge, what is the insurance for that house? Where does all the data about these items that are linked to my identity sit? Are they interconnected? What does it say about me, my credit score, my ability to repay my mortgage, my insurance policy? And that is really the long-term promise. And that's 10 years away. But right now, we still need to, A, educate, and B, build up this technology and understand that in order for it to make it to production, as Hannah was saying, we need to justify the ROI. And a lot of the projects that we're looking are very limited. And if you have to take it into production, into the integration and the implementation and the education and linking it back to the core banking systems and the legacies, it's not worth the business cost of it yet. We need to make it worthy of everyone's time, and I think we're not there yet. We still need to understand this technology and how we can link and really disintermediate how we do business.
That leads nicely to that question, which is maybe for Richard. So DLT enables a future of bankless banking. Should regulators intervene, and should we fear it?
So, sorry, which question are we going for?
So it's
top here.
Yeah, the future of bankless banking. So should we be afraid of being?
So it's a great question.
Yeah.
And it's reasonable because you only have to look at the Bank of England's working paper 605, where they suggest that they could rid the UK of commercial banks, and it's a good working theory until you realize that actually there's a reason banks exist.
Exactly.
It's to price capital and to issue capital, so issue credit. So fundamentally, actually, over the years, 50, 60 years of the technology revolution that's gone through banking, we have solved the problems where we have to come together and work together, cross-border payments, and the post-trade settlement space. And to answer the second question that's down here as well, We've solved them. They are market utilities. They're infrastructure companies. They intend to be in a monopolistic position, which gives them pricing power. And in doing so, they have grown rich and fat over the years beneath the banks in that infrastructure space, and they provide a very useful utility. Actually, we're now cutting costs and reducing costs. Our customers are demanding better, quicker services, cheaper services, and the regulator is demanding that we do it more openly and more efficiently. So we are now looking at our own market infrastructure that has been built up over the years, and it is now ripe for disruption. You call it disintermediation. And if to answer Jan's question up here, does distributed ledgers really make us do something we can't do today? Yes. It allows us to remove those monopolistic market utilities and remove them, we will, with distributed business models, which mean that we won't require those market utilities. You look at us as a founding member of the R3 Distributed Ledger Group. It's now just gone on to Series A, and that group of banks is coming together to solve the problem of our market infrastructure that has grown, as I said, fat and heavy over the years. To go back to the KYC, which keeps coming up, and the KYC issue that you keep seeing, there is no market utility for KYC. There's a reason for that. It's because sharing KYC is difficult. In fact, I'm more than happy to share or receive KYC from someone if they're also prepared to take the liabilities of the fines if you've got it wrong. But you're not going to. So the idea of sharing your KYC data, you do the due diligence, you share it on a blockchain, and then I take it off the blockchain and I use it, yeah, that's fine, as long as you're prepared to pay the fine when you got the due diligence wrong. And the answer is, no one's prepared to do that, which is why you don't see a market utility for KYC, which is why it's not, as I keep pointing out, a good use case for distributed ledgers. It is in those countries, in those areas of the world where you don't have central authority. If you've got a central authority, a government central authority, that is issuing identity, issuing KYC, then use it. We're going to return back to London, many of us, and we'll go in through Heathrow, put our passports on the gates will open because you have an API to a database in the UK Passport Office. That's what I want. That's how we solve ID. That's how we solve KYC. And so, just to Maya's point, we're still going through the education. We're trying to rid ourselves of those use cases which are not valid. We need digitization. We need databases. We need APIs. Go and do that project. Stop muddying the waters around distributed ledger. Where we are interested in distributed ledger is where we have a problem in our market infrastructure and we want to resolve it by creating a distributed business model in that space.
And that actually also shows the existing cases which we've seen that are starting to be successful is where there was either no market, so you're moving from OTC into something that you organize in a clearing and settlement way which didn't exist before. So suddenly you bring information to a market that was very opaque, or on the reverse, you're going to centralized places which were solving this counterparty risk issue but which were not necessarily transparent, and you're bringing transparency through that distribution or distributed governance in a way. And I think that's an interesting question we have here because I think some people think that distributed systems, you trust actually one blockchain, but because it's distributed, you're having a joint trust and administration way. And I think that the governance is so crucial. How can you set something up between governed entities, so regulated banks and governments, that would allow a joint governance without having one dominate, and with having those sort of identity and proof solutions where you can really let data and data proving play a role to make it sort of just. But maybe looking at this incremental step, you mentioned databases, APIs, and I think maybe Eric, from your experience, how we see industry starting to adopt things. No one goes directly into a fully fledged blockchain, but people are taking steps to learn and test, right?
Yeah, I think there's a couple of ways of going about it. If you look at Visa again, so that example, they're actually creating a B2B network. And Visa is huge in consumer payments, but they're not in the business-to-business space. So what they're doing is actually creating a new business. So they're not going in as their first blockchain project, trying to kind of redesign their core business. So I think that's one approach, which is pretty neat, just identifying a new business opportunity where you can use whatever market access, whatever strength you have as a company, which in Visa's case is, relationship with 15,000 banks, and build on that. And back to the ROI, just kind of getting that in, of course you should think about ROI. However, these are long-term projects. You need to think about it more as a VC investor. So you can't do your DCF analysis. You can't do some of these kind of basic tools. You need to think much more strategic. You need to think, what is this market going to be in 10 years? Can we center the market around ourselves somehow? Can we get 10% on this market? I think that's the way you need to think about it, because otherwise you're never going to make the decision to move forward with anything. So you need to have that vision and someone within the company that believes in that vision.
How do you go into a 10% market share if it doesn't leave the lab and it's not in production?
I'm sorry?
How do you get into a 10% market share if it's not in production, it's just in the lab? The problem is it's not going to make it into production if there is no ROI that justifies going live. Obviously, everyone has to experiment. The question is, when does it become real and tangible?
Right. So again, thinking about it like a VC, think about Spotify. 2008, I think that's when when they launched. There were no streaming services. You bought MP3s on iTunes, and before that you bought CDs. So of course, 10% of the streaming market in 2008 is zero. So you need to have that vision and say, in 10 years, now they have 130 million subscribers. So that's how you need to think about it. And back to the analogy about medium, a new medium for assets, which blockchain is. Spotify is a new medium for music. You used to listen live, then MP3s, and now you're streaming, and it's a whole new business model. So you need people with a little bit of kind of long-term ambition and a real vision, and then you need to take small steps towards that vision.
It ties in with the latest question, what is the catalyst for moving from proof of concept to production, critical mass, regulation, or credible business case? So I think, are there any other views, maybe also from Richard, on how do you get your organization to move from POC to production?
A couple of issues and challenges we face. The majority of them are social. From a technology perspective, we're comfortable that's moving in the right direction. Yes, it's an immature technology. Yes, we're reapplying it from the Bitcoin experiment to many other use cases, and the technology has to adapt to those new requirements. The Linux Foundation and the creation of the Hyperledger project, and the different technologies starting to come into that, R3 Corda, IBM's Fabric, Intel's Sawtooth, means that we've got the same level of convergence that we saw in Linux over the last 20 years, and the Linux Foundation is obviously well placed to bring that convergence. We don't have a single vendor who's now one. If you go back to the days of email in the mid-90s, Microsoft would have loved to have won that, and all of your emails would have gone through Microsoft Outlook servers. They didn't win that, and we are better because of it. Right now, for us, the major challenge is making sure that those technologies stay open. The people that talk about standards usually have an ulterior motive. They don't actually want open standards. They want proprietary standards that they can then profit from. And we need to make sure that we open this up, not so that the first generation of internet companies, in the emergence of the internet, when TCP/IP was out, AOL, Presto, would have loved to have owned the gateways in. We need to make sure that those standards are open so that Facebook and Amazon, those types of companies can emerge. We have yet to see those companies being created. They are starting to emerge. But we need to make sure it's open and the door's open for the Spotifys, the Netflix, and the Pinterest to come later, because this is a long play. That's the technology side. Happy it's moving in the right direction. No single vendor has won that. On the social side, though, you've got to try and get projects that work together. You've got to work together, and to do that, you hear me say it so many times, there's only so much fun you can have on your own with blockchain. You can't You can't do these projects on your own, which is why you're seeing the creation of consortia. And the consortiums that you've seen us join is to bring everybody up to the same level, to focus and hopefully align and find the visionaries in each of the houses, but lining them up is actually harder than we first thought. And the challenge is coming to an agreement around, or consensus, no pun intended, around what is the best thing to work on, rather than us all working on different pieces and then actually never adding up. And we're starting to see some of the incumbent intermediaries coming into this space who are looking to try and break out into new markets, and they see this as a way of effectively bringing their same centralized business model and use distributed technology. And there is literally no point using a distributed technology, as my engineers keep pointing out to me, if you're going to centralize the business. If you're just going to bring the data back in to monetize it, why would you distribute it? Just put a database in the place. We've solved that problem many times. Visa's got a very impressive centralized processing system. Why would you need blockchain? Why do you need distributed ledger? So the challenge here is new eyes on old problems. And those new eyes mean that we need to distribute and come up with business models of how we get paid as intermediaries in a distributed model, rather than bringing all the data together, which is not going to happen over the next 10, 20 years.
And I think you make a big point on data being open. Data is being opened up, even by regulations in Europe and PSD2 and all sorts of things. It's being opened up for reasons of competition, forcing it into the market. But now we would have a technology that could at least manage that better. And in my view, in terms of some of the things we are exposed to right now, we would be in a better place if we had already advanced on both technology and working together, because very often it's business inertia that doesn't adopt it. So the technology itself is often not the problem, but it's people agreeing on it and configuring it together. And if we were in a sort of distributed world in the future with the right nuts and bolts around it, the access to data and the fact that then how you deal with data to give a better service is something that would differentiate you, but data would be more accessible. And I think that's where today people think data is only theirs, and then they give it out in bits and pieces. So I think that's quite interesting. But you mentioned also standards. I mean, obviously ISO is...
Just to finish on that point, yeah. No, it's worse than that. They take my data, they put it with other people's, and they sell it back to me.
Yeah, exactly. And we don't even know that. And we haven't consented to it, so never mind for data protection, right? But you mentioned standards. So ISO obviously is started to look at it with TC 309. So standardization is in progress, and it looks like from the broad stakeholder group, it's going to be hopefully not just a few incumbents, but people doing this together. But also maybe back to Hannah on interoperability, and you mentioned before the old systems will still stay there for a while. How have you been focusing on interoperability, and what are the challenges that you've seen?
So short term, speaking of standards, we would just look at how could we leverage existing standards to to build projects with distributed ledger. And so we looked at ISO 20022 and looking at, okay, where can we leverage that? Of course, ISO TC 307 is very, very new, right? It just first meetings, it took place, second meeting will be later on. So some question even if it's too early for standards altogether, right? So technology is evolving, social acceptance, right? And regulation will have to catch up, and probably it's already a very common example, but like Ubers and Airbnbs had to exist before the regulation would have to catch up to them. And in speaking of interoperability, we have to look, and of course, we imagine the world that will not contain just one blockchain, and with multiple blockchains, we'll have to interoperate between them, and that will require a number of challenges to be addressed, like to the earlier point of identity of users and how those will be cross-transferred for transaction to go from one network to another, and then also across borders in the context of regulations like GDPR and others.
So we've got a question here. Digitizing assets seems the key prerequisite for any successful distributed ledger system. What can be done to bridge this gap?
So I agree with that. And the question is, this gap. So there's a couple of ways of thinking about it. The holy grail, when it comes to currency, for example, would be to have a central bank issuing, if it's dollars or euros. Because then if you receive that, let's call it a token, you're holding an actual dollar, right? Before that, you can do something similar to like when you're gambling or playing poker in a casino, which is you're buying in, you're buying chips. And now you're at the casino and you can use those chips, and at some point these chips are going to make it back to the window and are going to be cashed back for dollars. So gambling is probably a poor analogy, creates the wrong sentiment. But what we're doing with Citibank could basically be thought of as you're transferring money to Citibank through the existing rails. And then, Citi is going to issue you Citicoin. It's not exactly the way it works, but I'll use that because it's a simpler example. And then you can use that on a blockchain network. So it's not as good as a Federal Reserve dollar because you have some counterparty risk with Citi in this case. But that's one way to bridge the gap. The other way, which is even easier, is to issue something like an IOU on a network. So let's say you have 10 banks, and I'm Bank of America, and I just issue a Bank of America IOU, which is like a check. It's like a promise to pay something later. And then you can use those IOUs back and forth and maybe net settle on a blockchain network. And then at the end of each day, you can use the FedWire to do the real settlement. So again, looking at this last example in blockchain is like, hey, why the hell do we need a blockchain? We need to use FedWire. But it's, you have to start somewhere. You're not going to get the central bank to issue dollars on an unproven technology from their way of looking at it. So I'll see that more as kind of a one stop at the sequence of things that you need to do before you reach the end state.
Yeah. So I mean, from my experience, central banks, of course, look at the technology. They experimented within the RTGS system more to prove that it can work. But they're not at a point where they're saying, I will deploy it because they say, I'm a trusted central bank. Why should I move into a different system that is distributed? And also at European level, of course, it is a distributed system without using distributed ledger. So they're saying, well, we're already having a sort of form of distribution. But I think the ultimate vision that I have in my mind is, of course, you could create over the very long run central banks and banks hooked up to the same ledger or to interoperable ledgers to ensure that you ultimately have not only real-time transactions, but real-time FX. And I think if you have that long-term vision that would benefit from transparency, removal of information asymmetries, more efficient, and really rearranging the market into players that then have to really provide value add and better analytics and better data services versus those that made money with having a sort of a coked up position of power, and that power is going away, then of course you really get into the competition that regulators really want. And I think it also takes time for regulators to understand that, but ultimately I think we will move into that space. It's just going to take a long time. So maybe the last question before we
just close on that one, which is on the question of digitizing assets. You're absolutely right. The person asking the question clearly has done his research or her research. If you look at the parts of the financial service industry where we've already digitized assets and have had digitized assets for many years, in the wholesale banking area and the markets business, you're starting to see the emergence of distributed ledgers because they've already distributed the assets. The person asking the question probably comes from a retail space or corporate space where there are many things we haven't digitized yet. Mortgages being a good example. And as I already alluded to, in the UK, we still haven't issued or being given the ability to issue a token of someone's identity. All I can do is photocopy someone's passport, don't even know if the passport's valid or not, and then just file that away. We've got to go through those digitization process, digitized projects, and some of the parts of the financial services industry haven't gone through that digital revolution yet. And you're absolutely right, it is a prerequisite to actually getting the value or the true value out of a distributed ledger.
So maybe let's put up the Slido questions we had at the very beginning to see whether our audience has changed its mind. So again, in the long term, what is the biggest opportunity for DLT? Is it still payments or saving the whales?
Look at that, regulatory compliance.
Okay, suddenly we've got to, let's take some time. Okay, shall we say 3, 2, 1, stop? So we have an idea. Okay, so there seems to be more of an identity play going on. Now we've been hacked. And maybe moving to the second question in terms of the short term. Yeah, just vote now so we can close it out. There have been some changes. Okay, so in the short term, we should really focus on nature, save tuna, whales, and the environment. Okay, but I think it's quite clear that some of our conversation has been sticking. So the short term is really to continue to digitize, to work together, and to have the right vision to move it forward. And in the long run, it is going to, I mean, I firmly believe it will change the market and it will happen. But regulators will need to be more informed, central banks and other players need to be part of it. And I think that's where we get the real benefit and also the real challenge for those people that are maybe running business models today that are not necessarily built on inventiveness, but more on sitting on assets that may eventually go if you're in this distributed, transparent system in the future. So I think we have 4 minutes left. Everyone, a last perspective, maybe starting with Richard.
I'm most amused. Can we switch back to the long-term ones? I just wanted to see the answer on the long-term.
Yeah, long-term, Nigel, could we go back to that answer? Yes.
I don't have my phone with me. Okay. So I couldn't have a question. I wonder if you might try and answer this for me. Is there anybody working on the concept of peer-to-peer and offline transactions from the blockchain itself? So by its nature, obviously, you want to be connected to distribute information, but there are challenges around communications when you're not connected that then sync up. Do you, any of the panel, have any insight into any work that's done in that?
So question on peer-to-peer and offline, because not everyone's online all the time. Maya.
So I think there are some projects that are looking into, and when you mean peer-to-peer, it's either between nodes or between the final beneficiary, which are like supposedly the wallets, right? That's from the Bitcoin world. And given all the experimentation in the POCs, it's always more about the nodes, and when the wallets are, they're managed by the nodes. So even if you're offloading transactions, they're going to remain in the node level of that transaction, and then when you have connectivity to the node, they go automatically onto that blockchain. So that's a problem that is addressed in public blockchains through Lightning networks and so forth. It's not as applicable to POCs as they are designed today. You might see that in other POCs that are using the Bitcoin blockchain in order to notarize and publish it on top of that. So maybe they do have some of these concerns in how they're structured, but not in the banking world as far as I know.
Okay, so final results, again, up on screen. Richard, final comments.
So from my perspective, you're watching a technology that's evolving, that has clearly shown interest and has huge potential. The key for it is for people to come up to speed on what it can do, and then what you're doing today, and then involve yourself in those open collaborations with your peers and your competitors to solve some of your customers' challenges, which reduces your costs at the end of the day.
I think distributed ledgers and blockchains are revolutionary in terms of distributed business models and finance in itself. I think the fact that they're happening alongside the PSD2, the opening of banking as an API is an opportunity, to be honest, of rethinking what a banking model is and how the financial infrastructure can reconcile both of these technologies. What is a bank selling? Just transactions, or is it identity? It might actually be privacy. It might be a gateway into the financial world where all your assets, be it mortgage or things, are all stored as data, because we're living in a world where it's not about digitizing assets, it's about the assets itself are the data. And we need to kind of think how that fits into both our lives as individuals, but also in terms of the financial world. And this is the long-term opportunity, but we're still really, really far away from there. And we haven't started to address how we're taking this technology into production. You know, the nits and grits of how it's going to happen. So we're still kind of talking right here. And there's going to be about 2 years, I think, until we have a discussion about what needs to be done and what we're doing. But we are going to see, I think, by the end of the year, one POC that's going to make it into production and leave the lab.
Anna?
Sure. So takeaway from me for the last 3 years that we work with blockchain technology is that if initially customers were coming and saying like, oh, you do something with blockchain, we really want to do blockchain project, DLT project, doesn't matter what it is, we have this budget, we really want to explore and do a POC. And you know, blockchain, give me 2, right? It really comes to a very mature, feet on the ground, evolutionary understanding of what technology can and can do, what use cases are most appropriate for this technology, and then step-by-step integration, implementation, and vision on how that could make into production. First, in a shadowing mode very often to the existing process, or in a mode of potentially creating a new revenue stream, so like not necessarily disrupting the core business right away.
Eric?
So my final words of wisdom were very much aligned with Hannah's. So basically, make sure that you're creating value, even if it's long-term. Make sure that what you're building is not this shiny object called, you know, blockchain POC. It's actually solving a real problem down the line. And it's weird that you have to say that, but it's a really good piece of advice that more should listen to this early in the stage of this technology. The other thing is start small, but with a bold vision. Start small in terms of 1 or 2 participants. You don't have to be 10 when you're kicking off, but you know, the vision can be there. If you have the market mandate to do something, you can even do it yourself and then onboard others later.
So, final words, I think blockchain will transform financial markets and markets in general, and even governments. It will take a long time, but I think we're seeing very tangible incremental steps towards this. And we're seeing much more energy and focus compared to a few years. It moved from speculation to actually sitting down and solving problems. And therefore, I say blockchain is the future. I hope you had a great session, and please pick up the speakers afterwards. Thank you for a great panel, and have a great finish of Money 2020 this year.